So I just recently got done talking to someone that was freaking out about their credit score randomly dropping. But what they were unaware of is how much of an impact their credit card balances have to their overall credit score. Now, this happens more often than not. So let's go ahead and break down the 5 factors that impact your credit score. Now, I went ahead and used this pie chart to give you a better visual. The number one factor that makes up 35% of your score is going to be your payment history, which is pretty straightforward. The more on time payments that you make, the more positive impact it'll have to your credit score increasing. And if you make a late payment and it's reported onto your credit report, this can lead to your credit score dropping anywhere from 80 to 100 plus points. The second most important factor that makes up 30% of your score is going to be your credit card utilization. And this is referring to the amount of credit card debt that you have in comparison to your overall credit card limits. So the higher your balances are, the more of a negative impact it'll have to your credit score. And the lower your balances are, the more of a positive impact it'll have to your overall credit score. So be sure to pay your credit card balances down below 10% or less before your statement reporting dates. The third factor that makes up 15% of your credit score is going to be credit history. And by default, this is just something that you have to build over time. But a quick hack to get around this is by becoming an authorized user on either your parent, your family member, or a friend's credit card. But you want to make sure that they have 100% on-time payment history, low credit card balances, and good credit age on that account, preferably like 3+ years of history, because this will boost your credit score and reflect off of their positive credit history. The fourth factor that makes up 10% of your score is going to be mix of credit. You don't want to have a 700 plus credit score, but only have 3 credit cards and nothing else. You want to show responsibility handling different types of credit, so be sure to have multiple credit cards with different active loans, whether it be a mortgage loan, auto loan, or personal loan, just to show responsibility with different types of credit. And finally, the fifth factor that also makes up 10% of your score is going to be new credit, which is also referring to hard inquiries, which comes from when you apply for anything credit related. And the more hard inquiries that you have on your credit report, the more riskier you will look in the eyes of a lender. So don't just go out and applying for anything and everything credit related. So hopefully this pie chart was a good visual to understand what leads to your credit score going up or it going down, because your credit score will never just randomly change. So if you need to, always refer back to this pie chart to understand why your credit score may have changed. And if you need help with your credit, just comment the word credit down below.